Hey traders, welcome back to another video taking a look at some market setups for the day. A little bit of an interesting week, of course, with the holidays smack dab in the middle of things, but I did still want to make sure to not miss this last couple days of market action for the year. We're going to take a look at some indices here today, of course, S&P, NASDAQ, Dow Jones, things like that. And we'll also take a look at gold, which is up, about 0.65% here on the day. Let's go ahead and jump in. So first of all, we can take a look at the S&P 500. And if we just take a quick look at the moving averages on this chart, you can see we are still confidently in a very healthy upward trend. And I think that this is worth mentioning because a lot of times it's really easy to try to get fancy with the S&P 500 or the NASDAQ, Dow Jones, indices in general, and try to look for red flags, right? Looking for what's going to make this market tank off of a cliff. There's something in us as humans where we want to spot disaster before it happens. We want to be preemptive. It's a survivalistic nature. But when we take a look at the S&P 500, the NASDAQ, the Dow Jones, and they're all confidently trending to the upside, the thing here for me right now is that the path of least resistance on this chart is continued upside move. Now, at some point, yes, this will change. At some point, these moving averages will not be so favorable and they'll start trending the other direction. But until that happens, trying to call when that is a really challenging game. In fact, for me, an easier trigger would actually be to take a look at things like S&P, NASDAQ, etc., mark the highs, and let's look for possible breakouts of those highs to form new ones. That, again, would be the path of least resistance from a technical basis. For me, I bought the dip on the NASDAQ specifically, so if I pull that chart up right now, what we can see is the trade outline that I took here. Again, a really healthy, strong, bullish uptrend for tech stocks especially. And same thing with the S&P 500 as the NAS. I'm looking for a break through these highs as a confirmation that bulls are still in control and willing to take this thing higher from here. The Dow Jones is retesting a key level of resistance, but you can see actually kind of an interesting thing that happened. We went down in this case much further than in the S&P 500 and the NAS. You can actually see we tested the 100-day moving average on the Dow Jones, found support there, but now testing this key area of what was support potentially turned resistance. I'm really curious to see if the Dow Jones can actually break through this level and continue higher, as I would expect overall the continued uptrend to happen. But recently we've had a lot of sell pressure and there is possibility that sellers could come in this area. So I'm really neutral when it comes to the Dow because you're in a long-term uptrend, but a short-term potential downtrend shift. And I love to look at the put-call ratio when talking about indices. And you can see the put-call ratio basically shows us the volume of puts relative to the volume of calls. When this chart goes up substantially, what that's telling you is that put volume is really outweighing demand for calls. So lots of people out there buying puts basically. And on the flip side, when this thing goes really low, that's telling you everybody's out there buying calls. And what I actually find interesting here is recently we've seen a shift from incredible optimism, everybody buying calls, into just a bit of a shift back towards slight preference even for buying puts, which is very interesting. And this is actually a bit of a contrarian indicator for me. When I see this start to pop to the upside, it is actually, in most cases, especially in a bull trend, an opportunity to potentially gain some bullish exposure to the markets, take some long positions in my personal account. This morning, we had unemployment claims, which came in just about as expected. You can see the claims number were 219,000 claims compared to the forecast of 223, and it really didn't move the markets very much at all. But still showing us that, again, unemployment claims are not spiking one way or the other, which shows that the labor market, while not necessarily perfect, is also definitely not substantially slowing down, at least at this time. And if we take a look at the inflation graph as well, you can see inflation is still overall trending to the downside. As long as this doesn't start to really break out and start trending higher, inflation is at a point where, again, I think that the Fed is not necessarily happy with where it is at. They want it to come down to 2%, but it's not nearly the same threat that it was for the stock market and for risk assets as it was over here. During this time, you'll notice that the stock market did very poorly during 2020, 22, 23, but then at the same time, Bitcoin, did very poorly during that time. Speaking of Bitcoin, let's take a look at it now since this inflation chart has been coming down. And here's Bitcoin on a weekly chart, and you can see that right around that same point where inflation started to really materially cool down, Bitcoin actually bottomed out and started to go higher. So if you want to understand the macro for Bitcoin, pay no more attention to anything else than inflation and what the Fed is doing. Those are really key indicators to how hospitable or lack thereof the environment actually is for Bitcoin. Bitcoin down 4% today, although still, again, like I said, holding on to some very good gains this year and a pretty remarkable return this year from peak to trough. For me personally, I do have a long position on currently on Bitcoin. As I mentioned, the trends, in my view, still looking pretty intact for a potential soft landing from the Federal Reserve. And that is definitely an environment where I think Bitcoin is more likely, not certainly, but more likely to move higher than lower. And if it does move lower, I have a stop loss in the trade. I'll take a loss and move on. And one thing I really like is if we take a look at the AAII Investor Sentiment Survey, this shows us participants' response on whether or not they feel neutral, bullish, or bearish on the stock market. And actually recently there's been a trend lower in sentiment, people actually feeling a little bit more cautious or even bearish on the stock market. And I like to see that because as a bull, I like to be as potentially contrarian as I can be. I would not say that being bullish the stock market and Bitcoin is by any means contrarian at this time, but I'd prefer it be like this, 37, 38% of people saying they're feeling bullish rather than 48%, which is a much more bullish read. Well, again, when I see this number come down, it makes me a little bit more comfortable that I'm not on the same side of the boat as absolutely everybody else. In terms of the top setups algorithm, you can see Bitcoin is a bullish setup currently. We have NASDAQ also bullish on here, Euro Aussie, Euro Kiwi, Nikkei, Euro CAD, Dollar CAD. These are some of our bullish readings. And surprisingly so, US oil also on the list. And while oil has made the top setups list, for me on a technical basis, I would still like to see some sort of technical breakout here on oil, preferably above the 73 level. If you get above the 73 level, then I actually see a good potential move for the 78 level to come into play. That gives you some room to work with. But recently, just a chop fest on oil, so waiting for more confirmation for bulls to come back into this market rather than try and call where the bottom is. Now, of course, key support lies right around 67.5. And again, I'll watch for a breakout on this one. Otherwise, I probably won't touch this. Let's reverse this now and actually filter by negative score first. And here is some of our most bearish readings. We have the Australian dollar against the US dollar, the pound dollar against the US dollar, US treasuries, NASDAQ, and let's see what else. Kiwi yen, Aussie Swiss, Kiwi Swiss. We're getting a good number of setups here on the Edge Finder currently based on the top setups algorithm. And if you're not familiar with what I'm looking at here, the top setups algorithm takes a look at sentiment, technical and economic data reads like retail sales, inflation, NFP numbers, and it basically derives a bullish or bearish signal for all of our different favorite charts. So again, a lot of the trade setups that I actually take come directly from the Edge Finder's top setups page, and then I use a technical filter to look for a good entry, stop loss, trailing stop, things like that. And if you don't have the Edge Finder and you would like to try it out, there's a link in the description down below for you to get 30 days access to the tool to see if it's right for you. And again, the trials are not free, but if you do choose to pay for a 30-day trial, it's half off right now. It's just 99 bucks. You get 30 days access to the Edge Finder and all of our tools that we work so hard to build, and you can see if it's the right tool for you. By the way, that $99 gets credited towards your final purchase of the tool should you decide you'd like to stick with the tool forever. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.